Declining interest rates are having an impact on many sectors of the markets, including one space that's often overlooked: information services. Joining us now to discuss is Ram Sampath, Associate for Portfolio Research at TD Asset Management. Great to have you on the show.
Thanks for having me, Greg.
All right, so Ram, this is your first time on the show. Give us a little brief overview for the audience of your role at TDAM.
Sounds good. I cover enterprise services and diversified healthcare. So if you look at enterprise services, that consists of information services and IT services. And within diversified healthcare, that's healthcare providers and services.
Okay, so pretty key elements of an economy, but at the same time, as we were saying, a little bit overlooked. So let's talk about information services in particular, a little bit more about what these companies do if people aren't familiar.
Sure. If you look at information services, so these are companies which have had data for over 100 years. So they accumulate, distribute, and analyze all of these data and give it to companies so that they can make better data-driven decisions. Let me give you an example. Have you actually wondered what happens when you apply for a loan or apply for a credit card, or when you take a look at
that person you're sitting in front of you, they go away somewhere and they come back and you think, well, they just sort of made a decision with someone else. There's probably more going on, right?
Exactly. So if you think about what's happening, there's someone behind you who's taking the decisions when you take a loan, right? And these are what I would characterize as invisible giants. And there's a reason why I say these are invisible giants, because if you think about S&P 500, you think about the Mag 7, right? And no one actually talks about the other part of the market. So this is a part of the market where you actually have these companies who have all the data and take all of these decisions and have monopolistic characteristics, which goes under the radar, and hence I would call them as invisible giants.
Let's talk about some of those invisible giants, some examples of names in that space.
Sounds good. Verisk Analytics would be one invisible giant. So if you think about Verisk Analytics, so this is a company which is a massive player in the insurance space. If you think about insurance, you probably think about the major insurance players, not the ones who are behind it. So let's assume that your insurance went up by 10%. And you're thinking, okay, what happened? Like, I didn't have any sort of an issue, but my insurance still went up 10%. So you go around and shop for rates. And you realize, actually, the other company is also quoting a 10% increase and is in the same ballpark. There are two reasons why this could happen. One is probably inflation, right? The other part of it is maybe you are in a neighborhood where prices have actually gone up because people have had poor driving history. So that could be on. So if you look at it, if you step back and take a look at it, Verisk could be the sole owner, proprietary owner of this particular data, and they actually supply it to insurance. And that's why it comes back to these are the giants, and this would be one of them. And another example which I would call out is FICO. So FICO would be the invisible giant of the credit score data. You have probably heard about FICO scores. It is the 3-digit number where it actually tells you whether you should be happy or be sad about it, right? This is, let's say for instance, you want to actually purchase a house. And you think that, okay, I'll go to the bank and look at mortgages, right? And then the bank, you probably think that the bank is maybe calling the shots on what mortgage you need to get. But actually, you go back, the banks go to FICO and ask for the 3-digit score. And FICO does a lot of analysis, which would be, are you paying your bills on time? Do you have a good credit history? Do you have other auto loans or some other thing? And then finally, we'll spit out a score, which will tell, hey, Greg, you're good to go. You'll probably get a loan. Or they might say, maybe consider twice before giving Greg a loan, right? So your fate hangs on a thread when you're shopping out for houses, but FICO calls the shots and you don't even know about it.
So you don't even realize, as you said, these invisible giants. The thing about these invisible giants, though, a lot of them, I had no idea FICO was publicly traded, right?
Yeah.
I had no idea some of these are publicly traded. So let's talk about the opportunity in this space for investors in terms of valuation, other metrics.
Sounds good. If you take a look at FICO, the valuation is not cheap. And these have historically been very, very expensive companies. Just so that you get some perspective, the average group actually trades at twice as high as what the S&P 500
Really?
would trade at. And part of it stems from these companies being monopolistic companies, right? I have a chart up here. If you can pull that up.
Yeah, we'll show the audience this, and what is this telling us?
So if you look at it, you saw that interest rates actually declined in 2020 and 2021. You can see that the US mortgage originations actually went through the roof during that period of time. But now, coming to 2022 and 2023, the US mortgage originations are at an all-time low. If you look at it from perspective of the pre-pandemic average, you're probably around 50% below those levels. And why is this an opportunity, right? Definitely, one, you had a lot of pull forward applications. So people who were not able to afford a house at a much lower interest rate bought houses. But now what you're seeing is interest rates starting to come down. So as interest rates start to come down, there's probably going to be more activity. I would cite, I was probably one of the examples, right? In 2022, I was not able to afford a mortgage. It was a hard time. And so coming off into 2024, this is a very opportune time for me to take a look at it.
Okay, interesting movements in the market along with the broader themes that we've been talking about a lot on the show. Another theme we talk about a lot on the show is artificial intelligence, how it can transform industries. You're talking about massive amounts of data. There must be some overlay here.
Yeah, these are, again, when we take a look at what these companies do, these are data-driven decision makers, right? So they have these data sets for over 100 years. And when you look at Gen AI or artificial intelligence on a broad scale, the easiest way to get Gen AI is to have stacks of data or heaps of data. And you can kind of analyze a lot of the data which is there and spit out a faster and much accurate information than historically you could have done. I'll probably cite an example, right? Verisk Analytics would be one example where we can use, right? So let's say I hope you don't have a collision, but let's say there was a collision and you have some sort of claim in the horizon. And you're going and getting the claim done. Historically, it would have probably taken you 5 to 10 days for the claim to be processed, ensure that it's not a fraud, and then get the money back so that you can buy a new car. But with artificial intelligence, what we are seeing is that this has enhanced the process, and some of the claims can actually be validated and paid to you within 5 to 10 hours. And that's where Gen AI comes. And what these companies typically do is actually raise prices because they are actually providing services at a much faster rate. And overall, it doesn't increase their bottom line as much. And so this is very profitable for them.